According to Christ's apostle, St. Luke the Evangelist, in approximately 37 AD, a young man guilted his father into giving him his share of his estate early. Gilded with early access to his inheritance, this young man lived lavishly in a faraway land, feasting upon fattened pigs, throwing dice with back-alley hustlers, and laying pipe in first-century trap queens. Soon ran out of money and was forced to return to his father, humiliated, barefoot, and starving. He expected his father to reject him for his indiscretion and innumerable sins, or at best, hire him as a pig farmer on his land. But instead, the reckless man's father welcomed his son back to his home with open arms. This father's act of forgiveness was immortalized as the parable of the prodigal son and serves as an allegory of how God can forgive even the most highly regarded shit that people do with their parents' money. It should be no surprise then that a most degenerate 18-year-old slob by the name of user Jim C. Belfort turned to God after his profane, life-shattering trade. His parents' hard-earned wealth transferred to their son upon their death, who quickly burned it to ash in white-hot fire. Our madman is left alone and helpless, seeking salvation from Christ and strangers on WallStreetBets. It is my honor to share his bittersweet story and his prayer for a better tomorrow. Our degenerate friend appears to have been a lurker of our beloved subreddit during the 2021 bull run, but was evidently only 17 at the time, and so did not have his own accounts for trading. During those early days, Jim instead posted frequently on subreddits related to knives, politics, and masturbation, and began his WallStreetBets adventure toward the end of 2022. At the time, US stocks were barely crawling out of a horrifying bear market that shook the very foundations of companies with 100+ price-to-earnings ratios. Surprisingly, a fair number of WallStreetBets users were bargain hunting by buying shares of beaten-down stocks. Mr. Belfort, however, was repulsed. On October 5th, 2022, Jimmy chastised his fellow gambling folk for switching too quickly from bearish to bullish. And in one of the best examples of foreshadowing I have ever seen in life, he prophesied that the bulls would trade like shit and lose their inheritance. This date of October 5th, meanwhile, was exactly 1 week from the market bottom. In a terrible display of ineptitude, Jimmy B rejected calls for a market rebound and instead wound up his own self-donkey punch. In what appears to be his first significant trade ever, the young man celebrated his 18th birthday in style by dropping his birthday money on ticker APPL, obviously intending the ticker AAPL, or Apple. According to the baby-faced 18-year-old, he's been studying the stock market since age 6 and was ready to go ham. His allegedly 12 years of DD created an unconvincing argument that Nancy Pelosi's husband sold his Apple shares to offset taxes owed on Rivian, which does not make any sense. But since Nancy Pelosi herself executed in-the-money calls, this therefore indicated bullishness. His rant fell off the rails when he began describing how Jerome Powell was likely in collaboration with Pelosi to shake out retail traders so that Nancy and J-Pow could both buy shares cheaper. If Jimmy Bob did follow his own advice and bought calls, he would have printed, as Apple has been hauling ass toward the stratosphere all year. But in a now-removed post from several days later, our man admittedly took a loss, although we don't know how much because Reddit API changes no longer allow me to scrape deleted posts. But with Apple marching higher faster than Sherman through Georgia, this loss is only theoretically possible if Jimbo traded with obscene levels of regardation, like 10% out of the money options with 1 day to expiration, and I won't put that past him. However, I cling to hope that he actually did make a small gain and just hit the wrong flare. Or perhaps he misspelled the ticker once again and accidentally bought calls on Advanced Auto Parts, which has indeed self-recused from the bull market. But however big or small the alleged loss, it was this failure that drove Jimbo the Clown on his downward spiral toward irreconcilable degeneracy. Believing his 12 years of DD was ferociously curb-stomped by the corruption of Nancy Pelosi, Jerome Powell, and unspecified whales, Jim was ensnared by dissolution. Since the market was clearly corrupt, the young Belfort decided to pursue his own devil's gambit into a free money scheme. In the aftermath of his failure on Apple, He turned to subreddits Theta Gang and Dividends for professional consultation on his new plan. He intended to buy covered call ETFs like JEPI and SCHD and sell 14% out-of-the-money covered calls expiring in 60 days. In doing so, he intended to collect 6% premium annually on top of the dividend. He also wanted to lend his shares to Robinhood for someone to short, collecting another 1.5% yield. He reasoned that this stack would net him a virtually risk-free 11.6% on SCHD and even more on JEBI. One must imagine that Jim is the type of guy who eats soup with a fork, because this idea is window-licking level ridiculous. The commenters clowned him for thinking you can even find a buyer for 14% out of the money covered calls on a covered call ETF. And unless you're holding AMC, you're not getting a 1.5% return on share lending. In reality, you'd be getting 0%. Jim was left embarrassed, defeated, and disheartened. Seemingly, there was no strategy that would lift him off the ground. No miracle move where he could leverage his skill in mathematics for superior returns. His decade of stock market prep was for naught. A fresh 18-year-old just weeks prior, the stars in little Jimmy's eyes were quickly fading. Bombarded by TikToks and Instagram ads hourly on how you need to make 6 figures of income before you become a crusty 20-year-old, our man knew he was on the clock. It was time to turn to mommy and daddy's estate. At some unspecified point in the past, Jim's parents danced with the Grim Reaper. Upon their tragic death, their estate was divided among their 2 sons, Jim the younger, and an unnamed older brother. Mama and Papa Belfort's house was their largest asset, with about $1.2 million in equity. When property is inherited, the default method is by tenancy in common, in which Jimbo and his brother each own 50% of the house. Our reckless young trader, therefore, had $600,000 in real estate, and it was just waiting for him to open the spigot. It's unclear whether or not he consulted a lawyer, or even his brother, or if he just went straight to the bank and offered up his share of the house in exchange for cash. By using a home equity line of credit, or HELOC, Jimmy was eligible to borrow between 80 to 90% of his equity. In exchange, the bank gets a lien on his ownership of the house if he fails to repay his debt. And we can be certain that when dealing with an 18-year-old, even collateralized loans don't come cheap. But what choice did he have? Our man accepted. The loan went straight to Robinhood, the most trustworthy of all brokers. And once he threw in the rest of mommy and daddy's cash, Jim's account sat around $620,000. Now, adequately funded and leveraged to his personal risk tolerance, the mad lad was prepared to awash himself in riches. Monday, June 12th, SPY was trading for about $434, with no signs of slowing down. The market was firmly bullish, with retail and institutional traders coming off the sidelines to buy shares. But Jim believed the market had risen too high, too fast, and was due to dip by the week's end. In his first 6-figure trade, Jim bought shares of SPY and sold out-of-the-money covered calls. This method of trade is prudent. If you insist on going all in, selling covered calls on SPY is a good move. But Jim was not amused with his results. As SPY rose throughout the day, he disliked seeing his short calls work against him, even though they were still out of the money. According to his thorough understanding, covered calls are bearish because your short calls go green if the market drops. Clearly, the young man failed to read about Delta during his 12 years of study. Jim panicked and liquidated the whole position, without even realizing that covered calls are designed to work exactly like this. Although this trade surely netted him a small gain, the young man was not at all pleased. As far as he was concerned, the red short calls were a loss. If he was going to bring home the bacon, he needed to sharpen his game. In his mind, there was no way SPY could sustain this rally all week. This meant doubling down on his bearish trade. In a bold move that would make even Papa Legba quiver, Lil Jim entered his trade with no holds barred. Preferring a high probability of success, our man decided to use credit spreads so as to limit his risk. However, Jim failed to realize that spreads limit your risk versus selling naked options. They don't literally reduce your risk of loss. Alone and naive, Jim was vulnerable, filled with undeserved confidence. He appears to have put his entire account on call credit spreads with the short strike at the money and the long strike at 440. $6 out of the money with expiration that Friday. Although Jim never shared his break-evens, recreating an identical trade today yields about $200 premium on each $600 collateral. In other words, a potential gain of 33%. Jimmy B, with his whole account on the line, stood to produce a profit in less than a week that most people won't reach in a decade. If he could just pull this off, JB would walk out 200 grand richer, and if he wanted to, resolve his HELOC without a single interest payment. All he needed was for his contrarian bearish position to hold sway against the onslaught of overzealous bulls who aimed to bury him next to his disappointed parents. And for this avarice and untamed ambition, the mad lad was severely punished. You thought this was a game? On June 15th and 16th, the market remained in full yeet mode as the bulls pushed the S&P to another 52-week high. SPY had made its first convincing bullish move through 440 for the first time since the summer of 2021. While the average trader celebrated the return of green candles on green candles, our man Jim suffered a devastating loss. His short strike around 434 was completely out of play, and his long strike at 440 was also BTFO. He initially tried to roll up his long strike from 440 to an unspecified strike slightly higher, possibly 442. If he did the same with his short strike, this would give his entire position slightly more room to the upside while still being markedly bearish. But as market close approached on Thursday, June 15th, stocks showed zero signs of slowing down. SPY convincingly broke 442, and Jim's long strike was once again breached. As it stood, Jim was approaching his position's final day, facing a financial apocalypse that would leave him zeroed and indebted. Even for a youngster as audacious as Lil Jim, the risks were too high. Prior to market close that day, our man reevaluated the market and determined it was indeed bullish. In a remarkable pivot, Jimmy closed his call credit spreads for what was certainly an overwhelming loss, likely close to $500,000, although the young man never revealed the precise amount. We can only imagine his fear as he realized he owed the bank 600 grand, but only had about $100,000 cash left from the loan. His house was in jeopardy. Faced with $500,000 of unstructured debt, the rapidly aging adolescent had no choice. He must swing his position back around and recover his $500,000 of losses. There was no time to waste. Just before market close, Jimbo determined that the market would certainly rise on Friday, just as it had done every day that week. He took his entire remaining balance and dumped it into a bucket load of put credit spreads, a bet that the market would rise or stay flat on expiration the following day. This position was precisely the opposite of his call credit spreads. With his portfolio now positioned alongside the market's trend, Jim slept soundly knowing he would crawl out of this a stronger, wealthier man, indemnified of his losses and postured for further growth. Tomorrow, he would wake up to greet a new chapter. Well, buenos dias, fuckboy. Jimmy B woke up to the blaring sound of his 9 a.m. alarm and found SPY already dipping pre-market. Denial quickly translated into anger, bargaining, and despair as the bears wrestled control of the market from the exhausted bulls. Slow, consistent, and steady downward pressure drove shares lower throughout the day with no recovery. Armed with only put credit spreads, our prodigal trader was now in the worst possible situation for this reversal. Praying desperately for a turnaround, Jim was unable to peel away from his screen, left to languish alone and afraid as his position melted to zero. His inheritance was gone, dissolved into the void, and then it got worse. Prior to market close, Jim had evidently been assigned early on his in-the-money short put. As a result, he was forced to buy about $619,000 of SPY shares with money he did not have. Typically, the put credit spread holder would exercise his long put to cover the difference, thereby taking a 100% loss instead of taking on $620,000 of shares with more borrowed money. However, Robinhood does not indicate this counter exercise took place. This situation would only arise on Robinhood if SPY ended the day between his long and short strikes and the trader specifically told Vlad not to exercise his long put. Surely, as pitiful as Jim is as a trader, even he wouldn't deliberately do something so self-destructive. Those of us in the know are aware that his long put would indeed prevent this 619 grand of further debt, and that his account would simply be zeroed, which, to be fair, is already bad enough. especially when you owe the bank 600 grand. Jimmy, in his youth, however, did not have such knowledge. He believed that he owed Robin Hood 620 grand in addition to owing the bank another 600K. Staring at what he believed was over $1.2 million of debt, fear, dissolution, and disgust washed over young Jim, just as the mighty Red Sea washed over Pharaoh and his army. In this, his darkest hour, JB wrote a warning to other WallStreetBets traders that options were rigged and controlled by shadowy market makers and hedge funds. He relented that, through no fault of his own, his financial situation was destroyed by these ominous institutions. User Investor Noob jokingly suggested bankruptcy, clearly citing the Office meme. But in his terrible situation, the 18-year-old sought out thorough advice on bankruptcy subreddits literally 13 minutes after posting his loss porn on WallStreetBets, seeking to break the record for youngest person to declare bankruptcy ever. Unfortunately, Jim's situation was so debased that the wise lawyers on our bankruptcy couldn't even comprehend how such a situation could arise. There is no template for this level of degeneracy. There was only one possible direction left to take. Thoroughly stripped of his pride, a humbled Jim C. Belfort knelt before God for the first time in his life. He begged for grace despite his pride, for mercy despite his greed. Just as the prodigal son returned to his father barefoot and humiliated, Jim now turned to his heavenly Father for salvation. He believed that his sins would keep him from entering heaven, and we must imagine that he prepared himself for a systematic deconstruction courtesy of his older brother when he revealed to him that the bank was about to own the other half of their parents' house. As helpful Christian Redditor Gilg2 noted, Christ's salvation is free, which is a prerequisite for Jimmy's faith because he literally had no money left. Just as Christ taught his followers, want of money can spark evil in men's hearts, and untempered desire for earthly materials only further separates people from pious habits, among them goodwill toward others, humility, and generous service. For the record, I don't know for sure that Christ actually said anything like this, but I bet you'd find something pretty close if you read through enough scripture. Although Jimmy appears to have continued complaining about the market being rigged in the immediate aftermath of his conversion to Christianity, it does look like he was reinvigorated with renewed optimism. With perhaps undeserved confidence, our man has been cruising subreddits for ways of making money online, and is confident he can recover his 600K in short order. All he needs to do is be in the top 0.00001% of dropshippers and he'll be fine, if only he knew about the freeloader challenge. In one of the worst timed trades I've ever seen, the young man Jim C. Belfort has achieved self-cuckery to the maximum extent by shorting the bottom and buying the top with borrowed money. I have no doubt that the older brother is now privy to Jim's debauched trading and can only hope that he is as merciful to his ignorant younger brother as the biblical father was to his prodigal son, and welcomes him back to the remaining half of the house. To young Jim, I hope your search for Christ is fruitful. But until Christ and your older brother welcome you home, I welcome you openly into the WallStreetBets Hall of Fame. Please accept your crown and take your place on the throne of degeneracy.
Who wants to be king?
I welcome you all to join our free Discord, link in the description. And if you join Patreon, I can all but guarantee that the Freeloader Challenge will embroider you with enough money to make your non-degenerate friends jealous. Thank you all for watching, and don't forget to subscribe so you don't miss the next Dank Trades video. See you next time.